Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer keeping you sane in insane markets. It is Saturday at 8:30 in the morning, and I figured I'd just have a little chat with you guys to let you know what I have planned to try to promote my brand and push myself forward in all this quagmire of of talk that's out there and people just trying to jockey for your attention. So some of you might not may know, some of you may not know that I'm a retired chief trader. I was a chief trader in New York City for several large banks, and I ran a proprietary trading desk. And having to run a proprietary trading desk, I had to come up with trading systems. So I went through the gamut of different philosophies of trading. I basically started off with the canned stuff that everybody probably can read about today. You talk about moving average, crossover, divergence, and things like that, and crossover moving average systems, and you know Elliott wave theory. I even went down the path of like the delta phenomena with that was written by Wells Wilder, and I actually had absolutely no success with any of it. So really, what I had the most success with was price action based systems. And at Casa Sperma Torino, we had a team that we were taken off the trading desk, and I was given the job of running a proprietary trading desk. And basically, what it was, you couldn't use any of the bank's customer orders to make your money. You had to basically generate money like we have to do every day here out of nothing. No customer orders, no ability to see news before anybody else. Although today the playing field has been leveled quite nicely as far as news was concerned. I mean, back in the day, it was like you had to have every possible news service because one would release news that the other ones didn't release. We had Bloomberg, we had Knight Ridder, you had Reuters, you had all these different news services, and there'd always be one that had a piece of news that came out that nobody else had. So then you had a rush to go buy that news service because, oh my gosh, what if they're going to release? What if they're going to be the cutting edge as far as news is concerned? But really, trading news was also a failure because it was, it was always baked in. It was always baked in. So you, the one thing that I learned from my treasurer was you had to be in the train before the train moved. In other words, you always have to be looking for the next movement of significance before the movement occurs. In other words, there are many days I'll walk in, and since I don't have any real big structure to my life because I work for myself, I generally give myself, uh, come in at 7:30, see what the marketplace has done, do my analysis, which then I do the analysis for you guys. I put it up on my YouTube channel, and you get to see what I'm seeing or what I'm thinking. And I basically base my trading day off of my analysis for that day because I'm a day trader. So the point that I'm trying to make is that I had to come up with price-based systems. News basically, it's always like you're one step behind. If you weren't in the market before the news came out, it didn't really do you any good. And I always found that if you're positioned correctly, the news that comes out seems to always push um, the price in your direction if your analysis is correct technically. So it's like price determines the news. I know it sounds crazy, but that's what I found over 30 plus years. Like price seems to dictate what the news is going to be. The pundits after the fact, they're basically just Monday morning quarterbacks, to coin a phrase, and they're just giving you excuses as to why something did what it did. That's useless for us. Who cares cares why? You got to be in position before. So what I decided to do was I decided to take apart market structure. And the way I decided that I was going to um, do this was I was going to say, okay, how would I take a guy that just came in, is sitting on my proprietary trading desk, and he comes from I don't know, CIBC, New York. I'm just whatever. And the reason is remembering a gentleman that came by that was from another bank that you know basically used to make his money off of orders. And I hate to tell you that most bank traders just make their money off of customer orders. They don't really make money speculating. They make their money, you know, ripping their customers off. And there's nothing wrong with that. That's just part of the game. That's the way banks make money, and that's the way the traders make money. But when you're on a prop desk or you're in a hedge fund, you have to actually come up with trading systems so that you can make your money. You're not going to be able to rip anybody off because you actually are a customer of a bank. Nobody's coming to you for any type of order or giving you any order. You're basically just like, as you are right now, a customer. So what I decided to do is like say, okay, so you're coming and you're sitting on my desk. So how am I going to explain to you bit by bit, like my philosophy on market structure? And, market structure itself, it's kind of like, this ephemeral term that everybody seems to have a different take on. And it was first brought up back in the early 1900s, like 1915 through 1920, 1925, all the way up to 1930. And then, it started to evolve into different things as far as price patterns is concerned and things like that. But the original guys that talked about it were Bernard Baruch, Wyckoff was big with that. Who else? Betamillion Gates. Now these are people that you could try to find on the internet and read about, but really all their stuff is almost gone. I mean, it's the only way I found out about these guys when I was working in New York. I would go to the New York Public Library, the main library in New York, and actually research articles from like Market Ticker magazine and try to find articles that these guys had written about or when they were interviewed. So what I found was that, they had different market, like what they called market laws. And for example, would be one that basically said that when a marketplace went into a low period, now they never defined low period. They said, like, say, for instance, the marketplace met a low, and then it would stay in a range for, several weeks. Now, things are different today because news is assimilated so much more quickly. So markets don't really stay in say, an accumulation phase for weeks. The ability to buy large amounts at lower levels, if you believe that the marketplace is going to turn, happens a lot faster than weeks. It could happen in a couple of days. It could happen in a few hours, a matter of hours. But then, their law was that if the marketplace fell to a low level and then accumulation started to occur at that lower level, once a marketplace broke out of that range, and they used to use like 4 cents, marketplace broke 4 cents higher, then the marketplace was going to go back up into a bullish rally. And, that's basically the beginning of a market structure of a bull rally. Now, that had to be applied, like that principle of what they call the law I call a principle, because the law is definitely, you're able to prove it. Like the law of gravity. Market laws really are so nebulous that you have to twist them in like a pretzel to basically call them a market law. So I started studying these guys, and I started coming up with different ideas based on market structure. And, like, in other words, what was going to give me the best ability to determine whether or not the rally was real? What was going to give me the best ability to determine whether or not the sell-off or the bearish move was real? So I had to start with, you know, market structure based off of what the old timer said. And I started moving forward with that and adding my own spices to the sauce. So if I was going to take you as a junior trader and say, okay, look, I want to teach you like our ways, how we look at things, what the different types of market structure, what we got: trending markets that are characterized by, price movements consistent in one direction with, higher highs and higher lows, right? That's typical definition of an upward moving market. And then we have, like, then you could say downward moving markets, right? So lower highs characterized by deeper lows, lower high characterized by deeper low. So, okay, so we're in a bearish market, but where is there potential that, the bear move is over? Like, where is the turn point? The turn point is the most important aspect of the whole thing. If you got in on the short and it's moving in a direction, you're going to want to know, like, where's the best possible price to get out? Like, what is it? So, there are definitely, market measurements you can use, and you use the measurement in a way of determining whether or not the move is going to continue. Because if the measurement fails, then the move is very strong and it's continuing. And we could use this on, hourly charts, 30-minute charts, 15 minutes. You could even go down to 1 minute. Although with 1 minute, I don't know, it's like, what are you trading? I mean, although I do know some traders that use 5-minute charts that trade huge amounts of contracts for just 30 ticks. And that's fantastic. I mean, it's fantastic, but you need to have a huge account for that. And you need to have, like, gonads of steel to do that stuff, because it's so much, volatility in that short time that, 10 ticks doesn't really mean anything for me, because I trade hourly charts. So I have a different philosophy, but I'm getting off the subject. So I really want to break this down to, like, market structure, what trending markets look like, what a range bound market looks like, where it's creating support, where it's creating resistance. Once the marketplace breaks out either side, like, how can we measure, like, using market geometry, how we can measure, like, where it could go, support and resistance levels. Now, that one of my rules is that in a bearish market, support's rarely going to hold. And I think that's one of the best determinants of, like, whether or not a marketplace is really moving downward. If you have a support level, it doesn't hold, it blows right through it. That means there's a lot of people heading towards the exit. Enjoy the party, dance near the door. Now there's a lot of things, that you had to take from stocks to apply to currencies. And I intend on doing that. Like, volume analysis is really difficult in Forex. Now, what you'd have to assume is, if you're doing volume analysis, you'd have to assume that your broker's volume is very similar to everybody else's volume. That's the assumption you have to make. And it's probably right. It's not going to be off by that much. So you could use it, although I don't really use so much volume analysis. I just use price. I think price determines everything, different time frames we can go into, the hourly, 30-minute charts, understanding who the market participants are and who are running that move at the time. Is it us guys because we're basically running towards the door because we're freaked out, or is it the big boys? Big boys doing something to. Now, the big boys are always characterized by, like, it'd be a huge spike down or spike up, and then the opposite direction. So the big boys did something in order to spike the market up or down. Now, if the market spikes down, and that's us also jumping in, adding fuel to the fire, dropping it down, giving them a better opportunity to buy a lower price, drive the marketplace back up, which fools retail traders again. But then they're really sellers. So they basically went short, bought a lot of, maybe not 100% of that position back, but put maybe like 60% of that position back, took it back up, and then are going to dump it again at that resistance level if it's a bearish market. So we'll be talking about things like that. And then I'll get into like chart patterns, recognizing rising, wedges. You got inverted head and shoulders pattern and triangles, flags. So I'm thinking that if I break it down into little pieces, it'll be cool. It'll be something that's interesting, and it gives me some good content to put out there, so you guys get to know me, and hopefully you'll respond to my video and tell me what you really want to see, like other things you want to go over. I'm only a price action based guy. I don't do anything with moving averages or anything like that. So I'm just for like price action, but I could show you how you could use like my Trendergy calculator with moving averages. You'll have better success. So anyway, I want to go over that with you guys. I hope that you like what you're seeing on Park Avenue Trading. I really appreciate a lot of people that have been joining. Please share my videos far and wide. I want to build a big trading community, and I look forward to seeing you in the next video. Cheers.